All right, guys, here's your weekly housing and market update because this week was driven more by headlines than data. Interest rates stay near the best levels we've seen so far in 2026 and close to 3-year lows. But the biggest driver wasn't an economic report, it was news out of Washington. President Trump signaled that Kevin Warsh could be the next Federal Reserve Chair when Jerome Powell's term ends, and markets are already trying to price in what that could mean. Quick reminder though, the Fed doesn't set mortgage rates. Mortgage rates are driven by the bond market, inflation, and economic growth. But the Fed does influence how aggressive policy is, and that shapes where the bonds go. What makes this interesting is that Warsh has a very different view than the modern Fed. He's been critical of the Fed buying bonds, supports shrinking the balance sheet, and believes strong economic growth isn't automatically inflationary. That's a big philosophical shift, and markets are paying attention to that. At the same time, the US economy remains resilient. GDP growth has stayed strong, and manufacturing activity just moved back into expansion. That strength gives the Fed less urgency to cut rates quickly. A brief government shutdown limited fresh data this week, which kept the 10-year Treasury stuck near a key level the market has been watching closely. Until inflation data gives clearer direction, conviction remains mixed. Looking ahead, next week is a big one. We've got the jobs report, inflation data, retail sales, and major Treasury auctions. How those land will help determine whether rates stay range bound or finally make a move. Bottom line, rates are still near some of the most favorable levels we've seen in years, but markets are waiting on clarity from both economic data and the future direction of the Fed. I'm Yessie with the Taylor Group, keeping you in the loop with weekly housing market updates, interest rate trends, and what it all means for the Las Vegas housing market.